Let's bring in the former central banker for India, now the Booth School professor, Raghuram Rajan, joining us right now. I want to start here with the idea of sort of whether what we've seen transpire from Silvergate, from SBNY, from SVB, and now with whatever is happening with Credit Suisse right now, whether that's enough, Professor, to actually knock these central banks off of their primary goal, which was to bring inflation back down somewhere towards their target rates.
Not yet. I think they're going to wait a little more and watch. I mean, the reality is we have two different problems. One with Credit Suisse, which is a bank looking for a business, which has been performing poorly for a long time. This is not the same problem that other banks in Europe have, not even the same problem that the other big Swiss bank, UBS, has. So it's idiosyncratic. It's specific to Credit Suisse. The problem, of course, is it's a big bank, 600 billion approximately in assets. So many banks have exposure to it, and that's why markets are concerned. That's also why the Swiss National Bank is probably going to step in. Different problem for SVB and Silver Lake and so on. With SVB, the problem is lots of uninsured deposits invested in long-term bonds, which have created big capital losses. The problem, I think, in the U.S. is the fear that other small to medium banks have the same kind of exposure, and regulators have not been forcing them to take the losses to build up capital. And so there are more potential SVBs waiting to happen. That is the concern.
Yeah.
That's why the Treasury and the Fed stepped in.
What is the situation right now globally with regards to that potential contagion risk? Coming out of the financial crisis, most of the regulations as they were crafted, whether rightly or wrongly, were specifically designed to try to limit that contagion risk, or at least to be made aware of it much sooner than later.
Right. I think part of the problem is, at least in the U.S., these banks weren't subject to the same kind of regulations that bigger banks were subject to. For example, the liquidity coverage ratio, for example, the stress tests. Now, of course, what the Fed has done in raising interest rates rapidly has been unprecedented. That's been part of the problem. But typically, banks have hedged against this kind of interest rate movement. And so the fact that some of them are showing problems suggests risk management was not appropriate. This is where I think people are worried that there may be contagion. The same kind of forces may be playing out in other small and medium-sized banks. And the worry that the Fed and the Treasury have is there might be a silent run going on, that firms may be withdrawing deposits. So my sense is, as far as the interest rate measures go, the Fed is unlikely to back off and cut rates at this point, given what it knows. But I think it is probably going to be thinking 25 or 0. And, events till next Wednesday will determine which one.
You understand, though, I mean, as a former governor over at the Reserve Bank of India, you understand, I guess, the power and the importance of the communication itself. This isn't just about where rates are or where they're going, but it's also about what Powell, and for that matter, what some of the other FOMC members say, what Lagarde says, et cetera, et cetera. What can they say right now that would give the markets that confidence?
I think if they start cutting rates at this point, given that for both Europe and the US inflation is still a problem, it might signal panic. So I think the best they can do is, while they're talking about the markets, assure the markets that these banking sector problems are contained, that their focus is continuing on inflation, but they do understand market jitters, and they will do what it takes to support the banks as needed. Now, of course, the problem is that this raises the question of moral hazard, right? We thought that you would, if investors took risk, they got returns, and then when the risks hit, they shouldn't turn around and ask to be supported. Unfortunately, that is what is happening, which means that we have to revisit our regulations to make sure that they apply equally across the board.